So, what are the 5 biggest money myths that are out there, and how do you try and overcome them? Because it's so easy in today's world to sort of sabotage your finances, right? I mean, constantly rising bills, expenses, and the buy now culture, if you will, are all combining to really propagate some of the biggest money myths out there. So, we're going to tell you what those myths are and hopefully give you a strategy to try and overcome them. So welcome back to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Central Florida's longest running radio program, along with the top 25 financial planning podcasts on the World Wide Web. My name is Joel Garris of Nelson Financial Planning, where our team of certified financial fiduciary stands ready this week to help you change your life with a successful and cost-effective retirement plan. So probably the biggest money myth out there is this notion of, I don't have any money. I don't have any extra money to be able to save. That's probably one of the most common myths or excuses, if you will, that we hear from folks in terms of them trying to save money. And the reality is that the biggest way to solve that or to fix that myth is to reframe the issue. It's not, instead of thinking of it as, I'll save with my extra money, right? I'm going to do that with my extra money. The reality is you've got to sort of reframe that and get into the habit of paying yourself first rather than last. When you pay yourself first, you're taking a certain amount right off the top when it first comes in, rather than do everything that you want to do, pay all the bills, pay all the expenses, and then whatever's left over, then I'll save that. It doesn't really work very well at all. You've got to reframe that issue and get out of the mindset of saving your extra money. Instead, pay yourself first. Flip it around so that you're taking care of those savings right out of the gate. Because when you save money, you really are planning on paying yourself that money later on when you need it. So flip that around, and that's a good way to try and overcome one of the biggest myths out there in terms of money. Another one that always sort of comes up, and maybe less so now than in the past, but this notion that investing is only for rich people, right? I mean, that's never probably been more untrue, right? You've got lots of options. You've got online apps. I mean, you name it. You've got plenty of options and plenty of access. Word to the warning, though, on here, understand that if you have an app and you're constantly checking and moving and shifting things based upon sort of what you hear as the wind blows, that can start to be more of a trading thing and not an investing thing. Be careful. When it comes to investing, you really do want to be an investor and not a trader. Remember, you don't need a lot of money. You just need consistency. If you took $325 a month, and this assumes an 8% return, which is in line with what the historical returns of the market have been over the past 75 years, the reality is that if you took $325 a month, started that at the age of 25, assuming that 8% historical return, you'd have over $1 million by the time you were 65. Stop and think about those numbers. $325 a month. That's not outside the realm of possibility for most folks, particularly if you reframe that issue about paying yourself first. Take that $325 right off the top and invest that. Don't put that in your trading app thing. Invest it into a broad base, even an index fund you could use for that, and ultimately be consistent with that. And the reality is 8% return, $325 a month turns into over $1 million when you're 65. That is certainly an option that's available for the vast majority of people. Another thing that you hear a little bit about is that investing itself is too expensive. And And when you look at even the traditional approaches, the ability to set up accounts and open up an account is much lower, and those thresholds are much lower than they ever have been in the past. So remember, when you're using something like a mutual fund or an index fund, those are baskets that ultimately own a broad cross-section of companies. So what that means is that even though you might only have $100 or $300 or whatever the case may be, if you're investing in a mutual fund or an index fund, then the reality is that you wind up getting a fully diversified portfolio at a pretty low cost. I mean, some of the expense ratios, which would be the cost of owning those types of funds, are pretty low, and they continue to reduce down even lower now more than ever. So the notion that investing is too expensive, I think that one is really based upon sort of what's happening in the financial services industry as a whole. That one is really kind of getting less and less of an option. Number four, in terms of money myths, this notion that, I just pay the minimum and ultimately on my credit cards and on my bills, and ultimately those will go away, and that actually doesn't happen, because the reality is the minimum simply means that you're paying that over a much longer period of time, usually at a much higher rate, so it's going to cost more, and it's going to take longer to pay. So really don't get into that habit of just paying the minimum, particularly on your credit cards. And then lastly, obviously the need it now culture that we all live in today, that's the notion of keeping up with the Joneses. This one may actually be sort of more common than the first myth that we talked about in terms of not having enough money. Similarly, I think keeping up with the Joneses is sort of in that same category, because we all move sort of in similar social circles and tend to match behavior, and ultimately folks wind up really trying to do the same thing as what their friends are doing, and ultimately that becomes difficult if you don't have the funds to do that. So beware of that myth as well, the notion of trying to keep up with the Joneses. Ignore the Joneses and look forward to your future of being retired successfully. We're going to take a break. When we get back, we're going to continue the conversation on just how big the pent-up demand is that we hear about in the media these days as a result of the pandemic. Coming up next here on Dollars and Cents with Joel Garrison, News Radio WFLA.